All right, guys, what is happening, man? What is happening? What is happening? What's happening? Now this is literally going to be like the last strategy that I showed you guys in this little mini series. So it should be about 4 videos now, right? And I don't want to make it too long, so I've just kept it real short, and I'm just giving you guys the information that I think you need in terms of strategy wise, and more or less like what to do and how to use it from a technical basis. Now, guys, like I'm only showing you the technicals because I want you guys to formulate your own, your own risk for the trade. I want you to kind of like build up your own plan, and I'm just going to give you the technicals, and that's why I don't give you my full plan, because I want you guys to like use what I'm showing you for your own benefit and figure out how you're going to implement this for yourself, right? And that just comes with practice, and that comes with understanding yourself as a trader. But from a technical point of view, guys, we're going to go through that the last strategy I used, and this is the one I use the most, and it's the one I find the most effective for trading cable and for trading fiber. Okay, now, guys, like I want to just show you step by step what I'm looking for. Now, I want you to remember that I only use this once I know the order flow of the higher time frame. And the reason why I'm saying that is because it's so much easier and your success rate is going to be so much higher, right? Once you know what the higher time frame is doing and then looking for the strategy inside of that framework, okay? Now, you want to be using this because this is more just like a retracement strategy. You want to be using this when you know the order flow, okay? So I knew the order flow for this bit of price action was bearish because of, this was a 4 hour level right here, guys. This was actually a 4 hour block right there. And that is why I knew price was bearish, because we came into that 4 hour level right there. So all I was doing was I was looking for a continuation, guys, on this day, on the last, more or less the last day of the week, right, on Friday. So I was more or less just looking for a continuation from this bit of price action right here. So essentially, guys, like, the way you want to start off with this is that when you're looking for sells, right? So let's say, and there's only going to be two scenarios. Like, you're only going to ever use this to go long or to go short, right? So if you're looking for sells, and you want to know what the order flow of the day, or what is going to be, or where price is going to make the high of the day, then you want to be looking for price to be above the opening price. Okay, now what I mean by the opening price is you can literally do this on your computer. Just press Control and press Y, and it will bring up the day dividers, right? So the day dividers are going to show you when the new day starts, and this is going to be really, really important with this actual technique. So for sell days, so let's say I know I want to go short on price. What I'll tend to do, guys, is I always mark out the opening price, the midnight candle, okay? And this is going to tell me what I should be looking at, okay? And when I should be looking at a short to actually occur. Now, for me, guys, I only trade this session in the sessions, and this is like my London Open session, guys, and I'll probably name it that. But this is for London session setups only, right? On cable and fiber, okay, primarily. So what you want to be looking for is you want to draw out the opening price, okay? And here it's going to be, it's 1.1665. And that is the opening price for that day, right? So if I'm looking for sales, guys, I want to see price retrace above this opening price, okay? So inside of the London Open session, I want to see a retracement above this high, or above this opening price. And that's the first confluence that I need, right, for this strategy to work. Okay? That's the first thing that I need. The second thing that I either look for, right, is I look for either an OTE retracement inside of the London Open session. So let me just mark this out, okay? So this is the London Open session right here, guys, okay? And the London Open session usually is from 6:30 a.m. to around 9:30 to 10, right? So that's when you're going to be looking for a retracement. Okay, so let's say I marked out, and this is London Open. So it starts at that point and it ends at that point, right? Okay, boom, there you go. Now, what you're gonna be looking for is you wanna be looking for a retracement, okay, from previous OTEs, okay? So you're gonna be looking for some sort of retracement, usually from the previous day's high to the previous day's low. And I'll show you here. So that's the previous day's high and low. And you want price to more or less give you a retracement back into that range inside of the London Open, okay, session. This is more or less what you're looking for on a really, really basic level. You want to see price get above the opening price right here. So you want to see price get above this level right here. and then you want to see price give you a retracement inside of London Open. And really and truly, like, this is the two main things. Because once you know, all you're really doing here, guys, is just a retracement. Okay, that's all this really is. But you're just looking for it at a particular time of day. Okay, so it's the same thing. So let's say you were going to go short, right? Let's say you had the 4-hour chart and you're saying, okay, price is going to come to the area and I want to go short from the area. Like, all this setup just allows you, right? It just gives you, it gives you the time that this is most likely going to happen. And when you're trading fiber, guys, and when you're trading cable and when you're intraday trading this pair, you want to be looking for this setup inside of the sessions, because that is when price has the most liquid movements, and that's when it's most likely going to move, right? So you want to be looking for this kind of setup, or looking for this retracement inside of that time span or time period. Okay, so essentially all we're doing here is we're just looking for price to pull back inside of this retracement OTE area. Okay, it's nothing different, the same OTE area, right? And we want to see price pull back into a block. Okay, so it must pull back into a block, and it must pull back into the OTE retracement. Now, the block is more important. Okay, like, I want you guys to just realize that the block is more important than it pulling back into one of these OTE levels. I just use this to give me a framework of where I want price to pull back into, but I don't actually specifically use any of these levels to go short from. I'm always looking at the block, and this is what you always want to frame your trades on, guys. It's not random Fibonacci levels, because this just gives you what the range is. It just gives you levels inside of that range. But what gives you real, actual areas to go short from and areas to base your trade off are blocks. Okay, and this is what is moving price. Okay, it's blocks and liquidity. Like, that is literally it. It's not Fibonacci levels, guys. It's not indicators. It's not anything else. So you want to just be looking for price to pull back or give you some OTE retracement inside of London Open, and you want it to pull back inside of a block, and you want the order flow to match up. So whatever the order flow is on this time frame, it must match up with your high time frame chart, right? Which is usually 2 time frames above the one you execute on. So in this instance, guys, you want to see price give you this, like, you want the order flow of this day to be the same as it is on a 4-hour chart. So on the 4-hour chart, it was bearish. You want to see that kind of that trend line up on the 15-minute chart, and here it lines up perfectly with the 4-hour order flow. So that's why you get quite a nice strong move to the downside, and that is also, guys, why I was looking for shorts right here. Okay, so it's really, really simple, guys. That all you're really doing is you're using the same entry technique, which is your OTE return to block, but you're using it, guys, inside of this time period and time of day. Okay, the time of day is extremely important, and don't neglect this. Okay, the time of day is the most important thing within this strategy, because it's when you're going to get all these type of price action, okay, on all these type of price moves. Now, the reason why this works so well, guys, is because essentially what you're doing here is you're predicting where the high of the day is going to be, okay? And in this instance, guys, the high of the day, or this day's high, was made in the London session. And usually, guys, like, when you're trading intraday, especially cable and especially fiber, the high of the day is like almost always, like, it's around 80 to 90%. It's always most likely going to happen inside of the London Open session, okay? And the low of the day will usually be made in the London close, okay, which is usually from 3 p.m. to 5:30 GMT, sorry, right? So all you're doing, guys, is you're looking for your same entry techniques inside of the right time of day, and that is what's going to give you some real powerful moves. So let's say you went short from here, guys, okay? You could have gone short from that block, put your stop above it, right? Same thing, use a 15 pip stop or 16 pip stop, and literally just targeted that previous day's low, okay? And you'd have been out of that trade by, let's see what time that is, around 1:30, just from understanding, what was going on here. And I mean, guys, like, you could have used this retracement instead. Like, you could have used this OTE instead. Like, price still comes into that OTE area level, and it still comes into the block. Like, you don't have to use the previous day's high and the previous day's low. Okay, you don't have to use that at all. It's just understanding, like, what swing high, which swing low you should use. And I can't really teach you that. That's something that you understand over time, and over doing this a lot more. All right. So essentially, guys, what you're looking for is you're looking for an OTE retracement from A to B, boom, right here, and you're looking for price to go short. Okay, and that's essentially all you're really looking for. Like, there's nothing there's no duty to it, right? And that's the first way you look for this setup. Now, I'm gonna just scroll right back down to, I think it's the 20th of June, right? And essentially we're gonna be looking for, in fact, let me just show you another example, okay? So this is another example of the trade again. Okay, so what we're seeing here is we're seeing price below the opening price, okay? So inside London, okay, so it's the same thing, you're looking for the same setup again. So here you see price consolidate in the Asian session, okay? So this is like the Asian session from 12 a.m. to like 4 a.m. GMT. So essentially what you've got here is you get a consolidation in the Asian session, then you see a run below those lows, okay? So price has literally, it's dropped below the opening price for a buy, okay? And guys, like, you got to remember, like, the way you're framing this is that you want to be looking, whenever you're looking for longs, price must be below the opening price inside of London. And whenever you're looking for shorts, price must be above the opening price inside the London open session, okay? So this is where the manipulation happens, guys, and this comes back to the same accumulation and manipulation stuff I was talking about before. And, you know, go back to that video and watch the Power 3, because this is more or less the Power 3 what I'm showing you right here, but except I'm showing you how to use this practically now, okay? So essentially, guys, here it's the same thing. You're just looking for a retracement inside of the London Open, and the retracement, guys, have been from that structure low to that structure high, boom, and there you go. Price literally hits the tip of that. I mean, look at that. Look at the reaction of that. Perfect. Right. So you're looking for an OTE retracement inside a London Open session, and then you're looking for an expansion up, and usually you want to just get an entry from either a breaker or an OTE retracement. However, in this situation, I would have already seen that it's reaching for this block right here, and I would have probably gone long from that, just because, number one, I already know what the order flow is, okay? So the order flow is bullish, guys. It has been bullish, as you can see. I won't scroll back too far, but it was bullish on the high time frame. So I still knew there was more upside to be reached. And it was giving me this setup, clearly, like, price dropped below the opening price. It was a retracement, and it dropped inside of a block. All inside the London Open session right here, guys. And that happened at around 7:45, around like 8 o'clock, 7:45, right? So it happens right smack bang in the middle of the time of day, the London Open session, and it gives you the setup, okay? So, guys, same thing, all right? Retracement, entry off a block, stop below structure low, target previous day's highs and lows. Now, guys, in these situations, what I tend to do is, for targets, like, my first target is always going to be above the 18 session right there, okay? I like to target this area because this area usually always gets raided, at least that area. Now, if you want to be really conservative when you're buying from here, target that, period. Target that, take 80% of your trade off, and then leave the rest to run to take out the previous structure high, or the previous day's structure high or low. Now, this strategy works extremely well, guys, when you're targeting, more or less when you're just targeting structure highs, like the previous day's structure high, like the structure high there, or the previous day's structure low. However, if you're bullish, then you want to be targeting the highs, right? And if you're bearish, you want to be targeting the lows, right? So it's very simple, guys, okay? You're just targeting the next area of liquidity, but I think to make this a lot easier on you guys, the first target you should have, and you should always be conservative with your trading as well, just to be consistent, is you want to be targeting the Asian highs, okay? So when you're bullish and you're using this as a bullish setup, target the highs, okay? If you're bearish and you're targeting the previous day's lows, then what you want to be doing is you want to be targeting the Asian lows, okay? So if you went short from here, first target should be those lows. Second target should be this low, but in this situation, guys, because this low was so close to these Asian lows as well, I would have probably just had this as my first target right there. I wouldn't even bother to target those lows because it's so close. So I know that price is most likely going to reach for this low anywhere. So for me, I'd have had my first target there. But guys, to be conservative, just first of all, target you. Even if you don't have like a limit set or a TP set at that low, have that as a mental target first. So once price gets to that level, then you can start saying, okay, great, I should probably take some off now. Or I should probably take some of my position off, okay? So, God, that's a very big helicopter in the background. So guys, like, it's as simple as that really, and I'm going to just show you one more example of how you can use this for like a break setup, okay? And it's the same thing when you're trading this as a breaker, okay? You want to just be looking for the same run of a low or run of a high, okay? And I'll show you guys what I mean. So here we've got this price action on the 27th of June. And essentially what we've got here is we've got a run of the previous day's low inside of inside of the London open session, okay? So guys, it's the same thing you're looking for here. So you want to see price still needs to be below the opening price, which was actually here this time. So it still needs to be below this area, okay? Don't think this changes. It still needs to be below it, okay? It doesn't have to be that much below it, but it still needs to be below it. But the difference here is that what you want to see is you want to see the previous day's structure low, like, and this is really important. The previous day's structure low or high should get rated. And this is going to give you a lot stronger setups. Like if there is a low that gets, so let's say there was price made the previous day's low was there, but this was just another intermediate low and it rated it. That is fine. Like don't think it needs to rate like the previous day's low. However, if it does rate that, like instantly, the trade is a lot more, well, it'll be a lot more successful. It's a lot more likely to actually go through and work, right? So guys, like here you go. All you got to do in this situation is wait for a structure low to be taken out, i.e. right here. And you either want to wait for an OTE setup or a breaker setup. Now, I would usually wait for a breaker setup, guys, just because, it's a reversal pattern again. More or less all you're doing is you're just trading a reversal pattern. And the breaker setup is a lot more, you can get a lot more risk reward out of it and it's a lot better. However, in this situation, guys, you could have easily used an OTE setup right here because, and this would have been, I would have probably taken an OTE setup, guys, because it was really, really nice. Like price more or less just broke this structure high right there. It was a very small structure high, but it was high nonetheless. So it broke that high, closed above it, and it retraced back down into this block right here. Okay, guys, same thing. We ain't doing anything different here. Retrace back down to that structure low right there, with that block, into the OT area, and then we've got an expansion back up. Now, if you were entering from that block right there, guys, boom, I would have just targeted those Asian highs right there, okay? That would have been the first target, just because it is a lot easier to, again, guys, it's about being consistent. You want to just take what you can out of the market and get in and out, especially when you're trading intraday, because nothing is guaranteed. So let's say you're just targeting that structure high there, or those highs, and you put your stop below there. That's what 2R, okay? Nothing much, 2.5R really, okay? Nothing crazy at all. But nonetheless, it's consistent. And guys, it's just about consistency at this point, all right? You want to just be consistent in what you're doing. Okay, so at that point, guys, boom. All you have to do there is just get an entry there, and boom, 2R, you've got 33 pips out of that, you're done. You're out of the market, okay? And, it's the same thing, guys. I mean, the most important thing to remember is just you want to see price either get above or below the opening price, and you either want to see one of these two requirements. So you want to see a run of a low, or you want to see an OTE retracement, like I showed you in the previous examples. And that is all you're really looking for, and it must line up with the higher time frame order flow, okay? So higher time frame order flow, guys, and you want to see one of the strategies, one of our entry requirements being played out, and that must be above or below the opening price. And really, it's as simple as that, guys. And you'll tend to see these setups happen either at strong reversal points, or you'll see them happen inside higher time frame blocks, just like the 4-hour setup one I just showed you guys at the start of the video. So this is essentially what I do, guys, on a day-to-day basis. And yeah, I hope you guys got something good out of it, and I'll see you later. All right, take care, guys. I hope you enjoyed it.